for the bulls. For starters, it's not looking so good, but let's hope we end pretty good. And then next week is a lighter week, right?
Yeah.
We have a truncated week. For the kids, there are 2 days holidays.
Yes.
So lots to look forward to.
Absolutely.
15th and 16th, right?
Yeah,
Both
for them.
Yeah. And for us,
For us, one.
Which is seriously all right. Well, let's just quickly tell you what you need to know as we start another session. Basically, the last 2 days, end to end, right? I mean, if you track the markets from Tuesday's close to yesterday's close, the Nifty has moved 20 points. We got a flourish of a move on Wednesday after Tuesday's down move. Wednesday saw a nice, decent bump up. But yesterday, we could not follow through. That's point number one. So the Nifty failed to see a follow through after day before yesterday and what the market did. I'll get to levels, etc. in just a bit in terms of what the market needs to do. But U.S. markets ended sharply off the intraday highs yesterday. So there was not very much. At one point, it looked like the S&P, the Nasdaq, etc. would be up between 1.5%. But into close, the last 30-40 minutes, indices dipped and we ended absolutely flat. We got data, right? I mean, so you had US CPI numbers, which came in on the softer end of consensus expectations. The thing, though, is that this was largely in line. You know, it was not a big miss or anything of that sort. This was in line, and there was a little bit of nuance as well. For example, the year-on-year number is ticked up for the first time in a long time, basically telling you that the favorable base impact perhaps is behind. But otherwise, I mean, most indicators out of that CPI data was good, which should be enough for the Fed to, in a way, skip hiking in the month of September. There are still those who say, well, you know, maybe September they don't do anything, but later in November there is a hike which is coming, the one after the September meeting. You may be surprised, but the 10-year yield actually went up 10 basis points. Softer inflation is a pause in interest rates, right? So yields should go down, but yields went up 10 basis points. But that's got nothing to do with the data. There was a treasury auction which was poorly received, and that's the reason why yields were up. But, the 10-year is now back at about 4.1% or so. Oil prices, which have been marching upwards, they were down. I think that's positive news flow as we start this morning. Oil prices down about 1.5% or so. Let's get to levels on the indices. I mean, actually, I would say the read-through from global is not negative. It is largely positive. I mean, the big one, which is the CPI, there was no great, blowout on the upside. It's in line, but it's good. And, of course, the indication for what the Fed will do. So, all in all, I mean, this morning we start with decent cues. Now, we need to break out on the Nifty from the congestion zone of 19,630. I mean, if you just take a look at the last 3, 4, 5 sessions, the market has stalled around this 19,630, 19,645 zone. You need to kind of cross this. We left off just about 100 points under it at 19,540 in trade yesterday. Above that, above this congestion zone, you got the 20-day moving average. Basically, it's around the same levels. That stands at 19,664. So these are the two levels you need to cross and then stay above for this slight pullback that we've seen over the last 1 week or so to reverse. But you need a close, not just intraday moves. On the Nifty Bank, the low, by the way, I mean, if you want to look at supports, 19,470 or so, which was the low, I think, on Wednesday. Actually, sorry, yesterday's low is 19,467. That can be used as a near-term support level. On the Nifty Bank, we yesterday broke below Wednesday's low of 44,533. Here, things are perhaps looking a little weak. That CRR move from the RBI perhaps has hurt banks yesterday. The Nifty Bank needs to move above the 40 hourly exponential moving average, which stands at 44,823. That's the first level I would watch out for. That's about 300 points away, less than 1%, but that's the first one. The low of 44,280 for the Nifty Bank comes in as a bit of a support. So this is broadly the setup in terms of levels, etc. So watch that 19,630, 645 congestion zone on the Nifty, and above that, perhaps things will start to look a little better. Implied open is a little soft, 50 points lower this morning. Sonia.
Oh, absolutely, right. And we know that the market has been very range-bound last 4 or 5 days. The Nifty has been stuck in a tight range for 4 trading sessions.